Steve.
Hey, I sure do. And like you said there, John, we're seeing the stock up nearly 5% on these numbers, though we cannot compare it to estimates quite yet. EPS is coming in at $1.04 adjusted, and revenue coming in at $964 million adjusted. Again, now shares have pared back a little bit, up about 3%. We're going to keep digging through this and see what they say about the IT outage, but I'll send things back over to you for now, John.
All right. Thank you, Steve Kovac. We'll look for more. Patrick Moorhead, to you on this one, and really looking at the overall enterprise landscape right now, there still seems to be a lot of uncertainty, but a special kind of uncertainty around a name like CrowdStrike that had that big outage that broadly affected so many customers. If we just put NVIDIA to the side and look at what the enterprise itself is doing in this economic environment, how strong is demand? How stable?
Yeah, so right now, the downstream effects of AI or the opportunity for AI, it changed everything. What you had is board directives coming down and saying, listen, pause everything for a while until we figure out this AI strategy. And we have that. And then you have, for enterprise SaaS vendors, folks essentially saying, hey, we bought all this stuff during COVID. We need to chew through it and get benefit from that. Mark Benioff has been talking through that, but right now, everything in enterprise is focused on AI. There are budgets that are being reduced, non-AI budgets, to make way for those AI budgets, and that can be infrastructure, that's software, and that's services.
Okay, Paul Hickey, to you on CrowdStrike's results so far. The stock is higher. They have some detail in here that I won't try to get to because Steve Kovac is going to do that on all the provisions that they have in the guidance for making good with customers over this outage. How much do investors need to know before they can feel comfortable getting back into a stock like this?
Yeah, so I think it's been, about a month since the outage here, and so the ramifications of that and the damages or the what they're going to have to make good to customers on is still unseen. But what you have to remember is before this happened, CrowdStrike was firing on all cylinders. Fundamentals were very good, so it's going to take some time. But I think if you look back. If you go ahead like 2 years from now, 18 months from now, you'll look back and where we are now would probably be looked at as a good time to buy. It's rallied 33% off its lows, but it's still down a third from its high back right before the outage. So it's going to tread around here for a while, but longer term they'll get back on track.
We talk about the secular growth story in AI, secular growth story in cybersecurity. Is CrowdStrike a buy here?
From our perspective, there's a really strong headwind. Going into the July event, we actually saw public cloud vendors and servicers really investing money in R&D in this area. And so to us, we think that's going to be further perpetuated by an event like July 19th. And so we do think in terms of a competitive landscape or headwinds for CrowdStrike, this one for us is not necessarily an area of entry or the name that we would choose in that cybersecurity realm, just in the narrowness of the business.
Here we have the current stock market update for CrowdStrike Holdings Incorporated, stock ticker CRWD. Before we begin with the chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments section below so that other traders will be able to find this information more easily on the platform. So as we can see here, we have the daily price chart and it's a bit of a Freudian slip there. CrowdStrike did report earnings yesterday, and we did see some positive numbers from the company with sharp prices starting to move to the top side again. I haven't covered this stock much, except there have been a couple of instances where I did cover the stock, and I explained during the July 2nd video that I was going to be selling my position in the stock. And I would like to sort of re-summarize the trading activity that occurred with the stock, because this really did nail the top here. And it's not necessarily, I'm not trying to act as though I was, extremely prescient or a fortune teller or something like that. But as you can see here, I sold out right at the price highs for this recent trend rally. And mostly the reason that this was done was because I thought that the stock was simply too rich on a forward PE basis. The valuation was just way too high. It was just astronomical. So I thought, time to take gains on this stock. And then a very short time later, we had this, massive news story about the software outages that were taking place with Microsoft systems, and the stock just completely collapsed after that. And I'm not trying to sound as though I knew that that was coming. I mean, there was no way I could have foreseen something like that. The exiting from the position didn't have anything to do with the expectation for a software outage or anything like that. It was simply based on forward PE metrics. But as we can see here, the July 2nd trading session was right at the top. Right at the top of this longer term trend here. It really could not have been much better in terms of the trading level that was seen there. And then I did explain that at the end of July, I was going to re-enter the position due to the fact that I simply thought that this movement to the downside, this was definitely bad news for the company. But I did start to think that we're starting to become overextended to the downside. It was an incredibly volatile stock at that time. It was a bit of a risky position. I didn't recommend this in the trading room. This was just more of a personal position that I did discuss in the public section of this channel. Normally, I don't discuss real trades with in the public section. That's mostly in the members only section. However, with this one, I did say that I was going to start to re-enter into the stock toward the end of July, simply because this news story I thought had sort of run its course. I thought that type of thing was unlikely to happen again. They patched, they fixed the issues that were going on with the software outages. So it just looked unlikely to occur again. And I thought that the massive overreaction here did warrant new long positions in the stock. And as we can see here, this most recent earnings report is now influencing that position to the top side. What we've seen currently is a fairly significant break of near-term resistance. So I do expect the stock to have a bit more topside here going forward. So, as things currently stand, if we're looking at the overall price decline from just under $400 to this $200 mark, this is almost a 50% loss in total share price action here. We can see now that the 38.2% Fibonacci retracement of that move comes in right around current prices. And as we can see here, this was a significant level of resistance previously. Essentially, this level was tested during the August 22nd trading period. There we saw price highs coming in at 278.50, and this does roughly come in line with the 38.2% fib retracement, which is just over 276. So this is the daily time frame. So this is not a short-term time frame. So we can have a bit of distance here, as you can see on this price chart, the stock was clearly having some trouble overcoming this orange line here, which is the zone that is defined by the 38.2% fib retracement of this declining move. So as we can see here, this earnings report has been quite favorable, even from a technical perspective, not just from the fundamental perspective. But as we can see here, there are some very important price breaks that are now occurring. So number one, we do have a break of this upside resistance, historical resistance level. Two, we've now traded back above the exponential moving average cluster, which was a real issue for this stock, given the fact that share prices have fallen so quickly and deviated so far away from the exponential moving average cluster. And then in addition to that, you also have this break of this Fibonacci resistance zone. So this really does sort of open up the top side here at the moment. Currently, what I would be looking at would be this, as far as resistance is concerned, would be this 100 period declining exponential moving average. I may exit the position if we do see an approach there. Currently, that resistance zone comes in right around the $300 mark. So I would probably look to take gains a little bit in advance of that number. We're trading there somewhat near term. It's not very far away from current price action. So we could definitely see a price movement into that area. And then from there, a break above would target, something above 320. So something right around 323 would be the 618 retracement of this declining move. So, overall, this was a good earnings report. It does support the outlook for the company on a fundamental basis. Valuation is still an issue for this company, and that's likely to be the case for quite a while. I don't expect that to go away anytime soon. But now that we're seeing some technical breaks in addition to the positive earnings report, this trade does look very strong at the moment. And I do expect at least a little bit more of an extension here to the top side as a support. Supporting the outlook for the current trade. So here's the current market update for CrowdStrike Holdings Incorporated, stock ticker CRWD. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.